Hello, everyone, again. Welcome to the Forexrevolution channel. Today I'm doing something very special. I'm giving away the course of mine for free. This is $1,000 course and very knowledgeable. And I put all my time and effort in collecting all the knowledge myself. And after a long time, I'm willing to give it away. If you could, please subscribe to my channel and press the like, share button because the knowledge you're about to get is super, super important, very easy to understand. And I will show you my point of view about Forex. When I'm talking about trading Forex, it's actually technical analysis at its best. And technical analysis can mean that you can trade with this strategy, also crypto, also metals, the stock market, everything you want. So it's up to you. I'm thinking of Forex in a very simple terms because this is who I am. Okay, trading in general could be very, very complicated, and you can get into details about everything, and you want to know exactly what kind of a candlestick this is and that one, and this is and that one, and you have so many other candlesticks, and you have so many indicators, and you have so many trading alerts, and you have so many strategies out there that people are teaching. So I'm telling you, I've been searching online on YouTube, on anywhere, the best strategy to trade with, and after I spend my own time, I'm willing to give you the strategy that I developed myself. Nothing of this it's my opinion only. I've collected a few strategies from here and there, collected something together, and created one product that is very, very efficient, and you can start trading it today. So without further ado, I will introduce you to my trading strategy, and I will tell you about the Forex loophole. The Forex loophole is something that maybe some of you came across already, but now we will talk about it the way I see it. So as you can see, the market is all the time is trending, and then is relaxed, and then is trending again, and then is relaxed. What we call trending and range mode. So what we want to see actually, I'm going back to this drawing of mine. We want to see the price going in about 45 degrees angle. Okay, this is how we know when the price is trending and when we're not. So we're putting aside the technical analysis of watching the chart and thinking to ourselves, is the price is right now ranging or not? It's very clear. If the price goes like this, I don't want to join this trend because it's a 90-degree slope, and I really don't believe that it's working, because sometimes it is working, but sometimes it's just collapsing right back. This has got to do with news and everything, but you don't have to think about it right now. And I don't want to join trends that going sideways, ranging mode, okay? Because obviously the price will go and return and go, return, and we cross the EMAs all the time from below and above. I want to join only 45 degrees. When I'm saying 45 degrees, it can be 50, it can be even 40, but this is the area. We don't have to take some kind of tool and measure it, but this is the ground rule for it, okay? So we're looking about examples, like, okay, when price went like that, like we can see over here, I can't join this trend, okay? Because it's too slope. It's 90 degrees, just like that. And also when the price started to move sideways like that, I also didn't want to join the trend. Okay, this is all the time that passed. You can see it in front of your eyes right now. But when the price was like that, you never knew this. But either way, when you're looking at the price and the slope is too high, you don't want to join. When the price is ranging, you don't want to join. When you want to start a trade or enter the trend is over here. Now the price went from that angle, straight angle, to about 45 degrees of trading. After we spotted the 45 degrees trading, now we can look for the most important thing. This is what we came for. This is the Forex loophole. Okay, the Forex loophole, it means that many times in Forex the market repeats itself. I'll show you other examples. Okay, this is setups that I have waiting. Okay, let's watch that example. Okay, I will make it more narrow for you to understand. Okay, take a look at this. Okay, over here, over here we have the first Forex loophole over here. Okay, this is the second loophole. This is the third loophole. And this is the fourth. Okay? Not to get you too much confused, I will use the most recent one. Okay, so we want to see a reversal when the last reversal happened and the major movement went after this. So we can see that we had that move and then a retracement. And after the price crossed the 50 EMA, it went back and created another move down. Okay, like that. So after we can see that, we can call it an official loophole. What we have to do now is wait for the price to go again above the 50 EMA, okay, and wait for another loophole, okay. If we waited for that loophole, we would have seen that the price actually went down, okay. It went from here, the 50 EMA, it went to down again, moved all the way, went a little bit above the 50 again, just like it did before, and then made another move down. The first take profit will be around the last low here, okay. The second take profit is depend on the chart, and it can be at least 2 or 3 times the risk. So after we learned the basics, let's move into details. Okay. When we move chart by chart, this is what I do every day. This is the 1 hour chart. You can use it in higher time frames and lower. I found the 1 hour chart gives me about 5 to 6 trades a week, depends. And also, it's more reliable than the 5-minute chart and 15-minute chart. We're moving now in front of you one by one, and we want to recognize the last loophole. What we care about is only the last loophole. Okay, so we have that loophole. This is the 20 EMA, exponential moving average. This is the 50 EMA. You can look it up in the trading view indicators. Okay, moving average exponential, and you can set it up yourself. This is how your chart will look like. So this is the last loophole we have. See how very similar this loophole was to that one. See the connection between them? See the painting over here? It's very, very similar reaction. The price rejected off the 50 EMA and went down, and over here it went a little bit up, but then it moved already down. Okay, so we don't want to look on the all the way to the history. It doesn't matter. What we want to see right now is this last big loophole. Okay, what we have to do now is wait for the price to reach around here. If we would have wait for the price to reach that area, and we want to see some kind of a similar reaction to that, like it was on the last loophole. Okay, if it will happen here or maybe a little bit more down, it will be a valid loophole, and we will enter the trend after we see some kind of a bearish signal. What is a bearish signal? It's like this candle, which is a big bearish signal that's actually telling us that the down movement is going to continue. So we have now one opportunity waiting for us, and we're moving to another charts. Okay, this is loopholes I drew before. Again, the same thing. This, all of that, we don't care about. Okay, all of that is a reaction. Let me just delete everything for you right now. It's too confusing. You see, this is the last loophole. Okay, all of that reaction, all the way up, it's just a reaction of that loophole. Okay, so now what we have to do is wait for another loophole to appear below the 50 EMA, just like it did over here. We want to see some kind of a range mode. We want to see, as I told you before, this candle exactly, or something of a bullish candle, and then we will enter again. The first take profit would have been, let's say we entered over here. Obviously, the stop loss will be over here. The first take profit will be around 1-to-1 risk reward ratio. Okay, but you can enter twice or leave another part for, as you can see, twice, 3 times the risk. Okay, this is another opportunity that we have waiting for us. Now, this is the 1 hour chart. It may take a few hours or a day for the setup to be complete. This is why you don't have to be all the time in front of the computer. All you have to do is make your setup, but actually, it's very easy. You don't have to do this all day long. You have about 1 hour, 2 hours of work, and then afterward, you just only have to track. And you can also set alerts about a certain price that you want to see. And you can mark also over here, you can mark that you have some kind of a waiting setup. Moving on, this is what I do all day long. I have the 50 EMA, I have the 20 EMA. I don't want to enter that one too high slope. I don't want to enter that one. This is too low slope. Also, this one, it's too low. As I told you many times, when the price is going severely up, like in a straight angle, it will go severely down in the same angle. This is not what we want. We want that one. This is like gold to us. This is honey to us. This is what we are looking for. Now we have to spot the last loophole. This one is a little bit tricky. Okay, but after you will practice, you will see that the last time the market was rejected was around that area. This is the last loophole, but I always want to search for a deeper retracement. I would have chosen this one. Okay, so we're looking for a rejection of the 50 EMA. Okay, to happen around this area. Okay, we have another waiting setup. 45 degrees. This is perfect. All we have to do is look for the retracement to know where to enter, to see a signal like that candle, like this one, that is a reverse armor that telling us that reversal is probably going to occur. Moving on. Okay, this is I'm always joking about what kind of charts I don't want to see. See this chart? See this mess? Up and down and up and down and up and down and up and down in a straight line, not going anywhere. This is not what we want. Not right. This is so disgusting. We want to avoid this kind of charts. Just when you see these charts, just move on. Again, I'm moving one by one with you. Okay, so I have some kind of a setup over here. I saw a retracement to the 50 EMA, and then the price moved up. The slope is starting to be about 45 degrees. Okay, just to show you, you can also do it yourself, but just to show you what I mean. This kind of market I want to join. I don't have a certain entry point because this not an engulfing candle. It's not nothing that I recognize as an entry point, so I won't enter right now. I'm moving on to the next chart. This is not 100% secure. Okay, this is the last one that I don't know if you are familiar with my Telegram group. I'm sending signals over there for free. You can join the Forex Revolution signal channel on Telegram. And this is the last loophole. What I did over here was I managed to find that major loophole. Okay, waited for the price to go a little bit above the 50 EMA and then be rejected, and then it moved down as it's supposed to be under the Forex loophole strategy. Now we have some kind of a on the GBP JPY, we have some kind of a retracement starting to happen, and the 45 degrees angle starting to happen over here. But we have to wait. You don't know if the price will go again down and then just start to move like that. We are not interested. But we have something to watch on the long term right now, but not for now. Still moving on. Another successful trade that I took. Almost reached the take profit. Okay, take a look at that. Also, we had also a loophole over here and over there. Also worked like it should. And just like that, we are moving on and on and on. And this is what you have to do day by day. Spot a loophole, okay, like over here and over here. Repeat, enter to a trend. You know where to put the stop loss. You know where to put the take profit. Usually, you want to take some of the profit in one-to-one risk reward, and you want to leave some part to move along the way to take more profit. This is very common, nothing special. Okay, over here also we have 45 degrees angle starting to build up over here, but we don't know yet for sure because we don't know where the retracement will happen. What we want to see is some kind of a retracement, deep retracements to that areas, and then big move up, and then it will be a valid loophole to look for to another. Let's say it will get over here to another trade to move over there, and this is a starting of a building of a setup that we have to watch. Another one, another successful trade. This is the first loophole. This is the second loophole. Okay, look how beautiful it's working. A little bit below the 50 EMA and a move up, and again a little bit before the 50 EMA and a huge move up. I think this one was a false trade, a losing trade. I saw some kind of retracement of the 50 EMA over here and also over there. I waited and I saw this rejection. Wait a second, let me just delete that. I saw this candle and I thought to myself, this is going to be a trade that we're moving down, but it failed, and this was a loss. So you can see the reality that you also have losing trades, which is very natural. But the overall winning ratio is very high. It's high enough for you to maintain a very successful account, healthy account with the high risk reward ratio and profitable overall. Okay, another market that's moving sideways. This was very beautiful. It's like three loopholes that repeated itself one after another, just like magic. It was also a good trade. This one is the starting of a loophole. This one I'm watching, and it looks like we have now another 45 degrees happening. We want to see when the market will retrace. We have some kind of small loophole over here of the 20 EMA, and another one is probably appearing over here. I don't like this kind of trades because, as I told you, I like deeper retracement, which allows me to take higher profits. So I'm also always waiting. Maybe I will do something else. Maybe I will look for that one, that loophole, okay, to appear around here, if it will appear, and then I will take that trade. I'm only taking high quality trades. What we have over here? What did I do over here? Let's see. Just a second. Okay, so I marked to myself some kind of a start of a retracement, but this was the first loophole, so I didn't took it, and it's actually went down, and probably now the market will go sideways, and I don't want to trade this kind of market. Look over here, also very beautiful, well done all the time. I'm looking for this kind of pattern to happen around here. If the price will go around here and will retrace, I will enter. This is one was the entry point, by the way. Okay, this candle was the entry point. Moving on. No, this is a very ugly market. Sideways all the way. I don't want to trade this kind of market. No, thank you. This is starting to be beautiful. This is the AUD JPY. We want to spot the last loophole, but it's kind of tricky because it's not on the 50 EMA. It was over here on the 20 EMA. We can look for some kind of a reaction on that area, or maybe it will be over here. If we will see something similar happening over here, maybe I'll enter, but at a lower risk because I always like to enter from the 50 EMA, not from the 20 EMA. But this is me. You can change the strategy as you wish. Also, very not beautiful market to trade. And the last one, the AUD CAD, again, very not beautiful trend. We are not using that one. So this is it. Okay, we're going again. Let me just find the rules that I've written on one of the charts. I'm reading to you the rules, what you have to do. Maybe you want to write it down yourself. I'm giving away this free strategy, the free rules, everything for free for you to enjoy and capitalize on this market. Do yourself a favor. I wasted so many days, months, and years to find a strategy that is working in a very beautiful way. Don't look on another way. Okay? You can use my broker. Okay, I'm using the FX broker. It's a very good broker. Also, you can get up to $5,000 deposit bonus, which means if you deposit $500, you get $1,000 account, which is very important for you to start. You have some kind of money you can spend before you can fail the first, the second, the third trade, and we still will not lose your capital, but you lose only the bonus for start, and then after we start to get the hang of it, you will make more money. So you have to go to the TradingView website. You have to look for the 20 and 50 MA and put it on your chart. Spot a loophole. Wait for the next loophole. Markets must be trending at 45 degrees. Don't risk more than 5% of your capital, and repeat. Just do that and join my broker. You have the link in the description, in the comments also. And good luck for you all. Learn from my mistakes, from my knowledge. It took me so many years to learn. I'm giving you for free. Please use it for your own good, and good luck. Thank you. And please don't forget, subscribe to my channel. Thank you.